Hey everyone, I am pumped for this deep dive. You sent me that article about how elections can really shake up the markets?
Oh, yeah, that were.
Well, with the election practically breathing down our necks, I figured who wouldn't be thinking about that right now? So we're going to zero in on the stock market
Okay.
and Bitcoin, see if we can maybe spot any historical patterns, get a little sneak peek at what might be coming down the road.
Yeah, it's almost like you're trying to, what's it called? Read tea leaves or something, right?
Exactly.
Elections just bring this wave of uncertainty, and the markets, they really hate uncertainty.
They do.
But here's the thing, sometimes if you just like squint your eyes a little and look really closely, you can actually pick out some of those hidden patterns.
That is exactly what Eighth Wonder Capital is trying to do in their article. Does uncertainty around elections make for a predictable pattern? They dug through tons of historical data, crunched numbers, even tapped into what the experts are saying.
Yeah, and they found some pretty interesting stuff. Like one of the things that really jumped out is this trend where the stock market seems to do a little bit better in the months leading up to an election
Okay.
compared to years where there's no election happening. It's like, think about it. You have all this anticipation, all the speculation, maybe even a little hope sprinkled in that things could change for the better.
Hmm.
And all of that can create this like buzz in the market.
Right, like everyone's holding their breath,
Yeah, exactly.
just waiting to see what's going to happen. But then, wouldn't you think all that excitement would just kind of fizzle out after the election's over?
Yeah.
Once that uncertainty is gone?
Well, that's what makes this next finding so crazy. The data actually shows that the 3 months after an election tend to have even higher average returns
Right.
than the 3 months before. We're talking like they looked back at the last 11 election cycles since 1980.
Okay.
And those 3 months after the election, they averaged a 2.3% return versus 1.2% before. So maybe, just maybe, there's something to be said for the market liking a little bit of resolution. Even if the outcome wasn't exactly what everyone was hoping for.
Okay, so even though the election itself might stir things up a bit, cause some volatility,
Right.
it sounds like the market actually prefers the stability that comes afterward.
Absolutely.
But I bet there's more to it than just the election itself, right?
Yeah.
Like, what about the state of the economy? Does that play a role?
Oh, absolutely. That is a huge factor. Eighth Wonder Capital, they really emphasize that the overall economic climate at the time of the election might actually matter even more than who actually wins. If the economy is already kind of struggling, even if there's a positive election result,
Right.
it might not be enough to turn things around.
It's like trying to sail a boat in a hurricane, right?
Exactly.
The political winds matter, but the storm itself,
Right.
that's the bigger factor.
Totally. They also pointed out this really interesting historical trend. The stock market has this tendency to kind of soften a bit when the incumbent party, the party that's already in power,
Right.
loses the election. And it's potentially because those periods, well, they tend to have a higher chance of recessions happening.
Okay, so a change in leadership,
Yeah.
even if it's what some people want, might actually spook the markets a little bit.
Yeah, there's definitely a correlation there. But then, get this, a divided Congress, where no one party has like complete control.
Yeah.
That's actually been linked to positive stock market performance.
That's interesting. I hadn't thought about that.
It's kind of counterintuitive, right?
Yeah.
But it makes sense when you think about it because gridlock can sometimes be a good thing for the markets. It usually means there won't be any super drastic policy changes.
Right. Less uncertainty overall.
Exactly. And speaking of uncertainty, let's talk about where we are right now in 2024. I mean, the stock market's already up significantly this year, right? So you might be wondering if that changes anything.
Yeah, it's like the market has already baked in some optimism, right? So maybe those historical patterns, maybe they don't really apply this time around.
Well, Eighth Wonder Capital actually looked into that. They analyzed those years where the market was already doing well going into the election.
Right.
And guess what? It looks like those pre- and post-election trends we've been talking about, they still seem to stick around. So even with the gains we've already seen, we could still be looking at more positive momentum.
Interesting. So history might just repeat itself, even in a year like this. Now, remember how we talked about Bitcoin at the very beginning? I am super curious about how it fits into all of this.
Okay, well, this is where things get really interesting. Remember that article?
Yeah.
Well, it actually mentions the work of Callum Thomas.
Okay.
He's done some really fascinating analysis on the correlation between, get this, Bitcoin and the NASDAQ.
Wait, so is Bitcoin trying to be a stock now?
No, not quite.
Yeah.
But they do seem to be moving to a similar beat, I guess you could say.
Yeah.
Thomas's charts, they show that historically, Bitcoin tends to dip a couple of months before an election
Okay.
and then experience some pretty significant gains afterward, almost like it's mirroring those stock market trends we were just talking about.
That is wild. So if history's any indication, and considering how Bitcoin seems to be dancing with the NASDAQ,
Right.
is it possible we could see a Bitcoin rally after this election?
It's definitely a possibility, but we do have to be careful, approach it with a healthy dose of skepticism. Because while these patterns are super interesting, we're dealing with probabilities, not guarantees. And that's especially true in the world of crypto.
Yeah, for sure.
Oh.
Okay, so we need to keep our heads on straight with all this. But still, the potential is there. This whole pre- and post-election pattern may be impacting both stocks and Bitcoin. It's got me thinking about the bigger economic picture, We're hearing so much about inflation and liquidity these days. How does that play into this whole election cycle puzzle?
Ooh, great question. You're hitting on a really important point. I mean, the global economy, it's a bit of a roller coaster right now, wouldn't you say?
It really is.
And it would be kind of naive to think that wasn't impacting everything else.
Right.
So let's dig into what some of the experts are saying about how all of this connects.
Okay, yes. Let's hear it. Who are these experts and what are they saying?
Well, the article brings up Michael Howell. He's a super respected market analyst,
Okay.
and he believes global markets are heading towards this thing he calls a debt maturity wall.
A debt maturity wall. What is that?
Basically, imagine a massive wave of debt that's all coming due at the same time,
Okay.
which could potentially suck all the liquidity out of the markets.
Okay, I see where the wall part comes in.
Exactly. And he predicts this is going to happen around 2025. So we're talking about a time frame that goes way beyond this election.
Right.
But he doesn't think it's all doom and gloom, He believes markets should be able to handle this for a while longer.
Okay, good to hear.
But then he throws in this really interesting observation about the 10-2 yield inversion. You ever heard of that?
Oh yeah, the 10-2 yield inversion.
Which is typically seen as a pretty strong signal that a recession might be on the horizon.
It's when long-term interest rates are
Yeah.
lower than short-term rates, right?
Exactly. But Howell's argument is that this time around, this 10-2 yield inversion, it might not be as reliable a predictor
Okay, interesting.
as it has been in the past. Because the U.S. Treasury Department, they've been doing some specific things that are kind of messing with those rates.
Right, so the traditional warning signs, they might not be as clear this time. But what about the election?
Yeah.
What about its impact on government debt? I mean, that's a big part of the equation too, right?
Absolutely. And that's where the article brings in this analysis from the Committee for a Responsible Federal Budget.
Okay.
It's a bipartisan group.
Okay.
And they found something pretty interesting. They found that both presidential candidates' campaign plans, if they're put into action, would likely lead to an increase in federal debt.
So no matter who wins, we're looking at more debt.
That's what it's looking like.
Okay, well, what does that mean for inflation then? I mean, it feels like we're already drowning in it as it is.
Yeah, you and everyone else. Inflation is a major concern, for sure. And that's where this legendary hedge fund manager, Paul Tudor Jones, comes into play.
Okay.
His perspective, and it's a pretty bold one, is that we might actually need higher inflation to deal with all this growing debt.
Wait, higher inflation could be a good thing. How does that even work?
Think of it this way. Inflation, it slowly eats away at the value of debt over time. So in a sense, it can kind of act like a sneaky way to make that debt less burdensome.
Okay, it's like slowly deflating a balloon instead of just popping the whole thing. I can see the logic there.
Exactly. But, we got to think about what the folks in charge of keeping inflation under control are thinking about all this.
Right. What are they saying?
Well, the article brings in the perspective of Janet Yellen.
Okay, our Treasury Secretary.
Exactly. And she said that she's not super worried about the current debt levels.
Oh, interesting.
Because she's keeping a really close eye on something called inflation-adjusted interest payments relative to GDP, our gross domestic product. And her goal is to keep that ratio below 2% for the long haul.
So it's all about finding that balance, right?
Yeah.
Managing the debt, keeping inflation in check, and somehow navigating all the potential ups and downs of an election year.
You got it. It's a lot to juggle, for sure. But that's why having a framework, a set of guidelines based on historical data and expert insights can be super helpful.
Okay, I am ready to hear more about this framework. But maybe we should take a quick break first so everyone can grab a drink, stretch their legs, and get ready for the next part of our deep dive.
Sounds good to me. Welcome back. It's really fascinating when you think about how all these things, elections, stock market trends, Bitcoin, even inflation and global debt, they're all kind of intertwined.
It really is. Like a giant complex web, you pull on one thread and...
Who knows what's going to happen?
Exactly. So how do we even start to make sense of it all?
Well, remember that article from Eighth Wonder Capital? They weren't giving specific investment advice or anything,
Right.
but they did drop some pretty valuable hints based on all their analysis.
Okay, yeah, the hints. What can we actually learn from all this to make smarter decisions?
One of the big takeaways was to really focus on companies that have strong cash flow and manageable debt.
Okay, that makes sense. Those are the companies that are probably going to be better equipped to handle any economic storms, right? That debt maturity wall we were talking about.
Yeah, exactly. Exactly. They're built to be resilient. And that actually lines up with what Terry Smith was saying about looking for companies with higher returns and gross margins, especially during times of inflation.
Right, companies that can raise prices without losing customers because what they offer is in such high demand.
Exactly. They have pricing power, which makes them way more attractive when inflation's running hot. And remember how Paul Tudor Jones suggested diversifying with things like gold, commodities, even the NASDAQ and Bitcoin, as a way to hedge against inflation?
Oh, yeah, yeah, it's like building a financial bunker, right?
Yeah.
Stocked with all the essentials to survive whatever the economic weather throws at you. Gold and commodities, they tend to hold their value when traditional currencies are losing purchasing power. And the NASDAQ, well, we've already talked about its interesting connection to Bitcoin.
Yeah, we'll definitely circle back to that. But the key takeaway here is to be strategic about it. You don't want to just randomly diversify. We're trying to understand what's actually driving the markets and make informed choices based on what the experts are saying and what history has shown us.
Right, it's about having a roadmap, not just wandering around aimlessly and hoping you stumble upon some treasure. But speaking of history, all this talk about patterns and trends, did this stuff actually play out in past elections?
Let's rewind for a second and think about the 2016 election. I mean, that was a wild ride, right?
It was.
An outcome that a lot of people didn't see coming. And in the lead up to that election, the stock market was definitely jittery. I mean, there was a lot of uncertainty in the air.
Yeah, kind of like what we're seeing now. But what happened after the election? Did the market freak out?
Nope, not at all. Even with that unexpected outcome, the market actually rallied pretty significantly after the election. It seems like just getting rid of that uncertainty, even if it meant a result some folks weren't thrilled about, was enough to boost investor confidence.
So even a surprise outcome didn't completely derail the market. That's interesting. What about Bitcoin, though? Did it follow that same pattern, dip before the election and then rally afterward?
Oh, it totally did. If you go back and look at the charts from back then, you can see that dip in the months leading up to the election, and then boom, a surge in the months that followed.
Wow. It's like the market and even Bitcoin were kind of anticipating that the uncertainty would be resolved no matter who won.
Exactly. And you see these similar patterns popping up in other election cycles too, which suggests that maybe, just maybe, history's on our side.
Okay, so we've got these patterns repeating themselves, but is it safe to assume they'll always work that way? I mean, could this election be different?
You're right to be cautious. Historical trends can give us some really valuable clues, but they're not foolproof. I mean, this year, we've got some unique things happening. There are still economic worries lingering around, those geopolitical tensions you mentioned earlier, and the world of tech is changing so quickly.
Right.
It's almost like trying to predict the weather months in advance. You never know when a storm might roll in.
So a crystal ball is definitely out of the question. But what can people do to prepare? For whatever this election might throw at us, it feels like a lot to process.
It is. But think about it like this. Meteorologists, they use weather patterns and historical data to make their forecasts. And we can use those historical market trends and the insights from experts to help guide our own investment decisions. It's about understanding the forces at work and making smart choices even when the future feels a little unpredictable.
Okay, I'm starting to see how all of this fits together. What are like the key principles we should be keeping in mind?
First, just remember that elections always bring uncertainty, but that uncertainty often clears up afterward, which can create some really interesting opportunities.
Right. Don't just focus on who wins or loses, but look for how the market might shift afterward.
Exactly. Second, keep in mind that the election isn't the only thing influencing the markets. You got to consider the broader picture, both here and around the world.
The big picture, right? Don't get tunnel vision on just one event.
You got it. And finally, this one's super important. Don't forget about the power of diversification. Spread your risk across different types of assets, like we were talking about earlier.
Right, so not just stocks, but bonds, commodities, maybe even a little Bitcoin sprinkled in there.
Exactly. It's like building a well-balanced meal for your portfolio. Now, before we dive into those alternative investments like Bitcoin and explore some specific strategies, let's take a second and make sure we're all on the same page.
All right, I feel like my head's going to explode with all this info. We've covered elections, stock market trends, Bitcoin, inflation, I mean, everything.
Yeah, it's a lot, but hey, you're keeping up. It's like we've been putting together this giant puzzle, and now we're finally starting to see the big picture.
Exactly. So as we head into this election, what's the most important thing for our listeners to keep in mind about their investments?
I think the biggest takeaway here is that, yeah, elections are uncertain. But that uncertainty often leads to some really interesting opportunities. Remember those historical trends we talked about? The stock market tends to do pretty well after the election, regardless of who wins. It's like just getting rid of that question mark, even if the answer isn't what everyone was hoping for, can actually be a positive thing for the market.
Okay, so don't panic, stay informed, and maybe even look for some good buying opportunities once the election hype dies
Oh,
down.
exactly.
But also, the election itself is only one piece of the puzzle, right?
Absolutely. The overall economy, the political landscape, what's happening around the world, it all plays a part in shaping those market trends. It's super important to look at the whole picture, not just get fixated on one thing.
Right, connect the dots. And speaking of connecting dots, I got to bring up Bitcoin again. That connection with the NASDAQ, the potential for a rally after the election, it's just too interesting to ignore.
I know, right?
Hmm.
It just goes to show you that the markets are complex and everything's connected. And while we can't predict the future perfectly, those historical patterns do suggest that Bitcoin could be worth watching closely as we get closer to the election.
Definitely something to keep an eye on. Okay, so we've talked about these historical trends. We've heard from some really smart people, and we've explored how elections and the stock market and even Bitcoin all kind of relate to each other. But what does this actually mean for someone who's just trying to make good investment decisions? Like, what are the actionable things they can do?
I think it all comes down to a few basic principles. First, do your homework. Don't just follow the crowd or make decisions based on emotions. Take the time to really understand the companies you're investing in. Look at their financials, their leadership, their long-term potential.
So be informed, make calculated decisions, don't just gamble.
Exactly. Second, manage your risk. Diversify your portfolio. Spread your investments across different types of assets, like we talked about before,
Right, don't put all your eggs in one basket.
especially during times like these when things are uncertain. And finally, and this might be the most important one, be patient. Investing is a marathon, not a sprint. Don't get too caught up in the day-to-day ups and downs of the market. Focus on building a strong, diversified portfolio that aligns with your goals and your risk tolerance.
Okay, so have a plan, stick to it, and don't let the market noise distract you from your long-term goals.
You got it. And remember, all of this, it's just information. It's not financial advice. Always do your own research and talk to a qualified financial advisor before making any investment decisions.
That is so important. We're just trying to spark your curiosity, give you some things to think about, and hopefully some knowledge to help you make your own informed decisions.
Well said. I think we've given our listeners a lot to consider today and hopefully some tools to help them navigate this election season and beyond.
Absolutely. Before we wrap up, I want to leave everyone with one last thought. Could understanding these historical patterns and focusing on companies that have good cash flow and manageable debt actually lead to better investment decisions? Something to ponder as we head towards the election and beyond.
That's a great question to leave them with. Remember, the market's always changing, always presenting us with new challenges and opportunities. By staying informed, thinking critically, and using the insights we've talked about today, I think we can all become more confident and successful investors.
I love that. All right, folks, that wraps up this deep dive. Stay curious, stay informed, and keep exploring this fascinating world of finance. And who knows, maybe we'll all be celebrating a Bitcoin rally after the election. Until next time.